Investors, this week's topic, the third part of our Oak Harvest 2026 market outlook. We've been doing these forecasts for a little over 5 years now at Oak Harvest. It's to give our clients and prospects an idea of what issues, as well as what opportunities the Oak Harvest investment team thinks the coming year might present to investors. There are many times when tactically the investing odds favor going faster and investing more. And there are other times, like going into 2020, that our team said, curb your enthusiasm and proceed more cautiously. As we've seen in a few years, like 2017, those lacked volatility. The bull strolls out of the gate and your ride is over in 12 relatively uneventful months. Investor looks back at the end of the year and it looks like nothing eventful happened, but your portfolio of stocks gained. However, more often than not, like 2025, you look back at the end of the year, the markets and your investments endured a few bouts of downside volatility. Most years, even in strong bull markets, the bull tries to buck investors off its back onto the ground. Hopefully, an investor ends the year without being gored. Our team is thinking 2026 will likely be one of those more volatile years. We previously discussed the elevated volatility in midterm election year, like 2026 will be. The gain in president's second year from 1950 through 2023 period has been only 4.6% per year, less than half the average annual return of the S&P 500 of about 10%. Remember, investors, these are point-to-point returns at the start and end of the year. They don't include year highs and lows. That is, they don't include volatility throughout the year. For 2026, throw into the mix, it's a midterm presidential election cycle year equation in the market's history of testing a new Fed chairman during their first term. Investors should be wary of late first quarter and the second quarter of 2026. What am I talking about? Well, let's talk about it. Clearly, President Trump is looking to nominate a more dovish Fed chairman as Chairman Powell exits in the first half of 2026. While this is likely to be bullish longer term for equities, it doesn't guarantee a smooth ride during 2026. The chairman is just one vote, and while they have sway, they don't cast votes for others. Investors, the last two Fed meetings are case in point to the Fed becoming more divided on the future path of interest rates. Believe the dot plot or not, believe the dissensions or not, these events are becoming more and more regular, like last year. Historically, the markets test the new Fed chair early in their terms. What am I talking about? Here's a list of recent FOMC chairs, what happened during their first 12 months in the lead seat. Lots of negative peak-to-trough numbers in there. Team at Oak Harvest believes that past market cycles have been proving quite omniscient, and their predictions of the markets under Trump 2.0 save that minus 10% 5-day decline around early April tariff tantrum. A similar outcome to Trump 1.0 and the previous dot-com cycle prevailing in the first half of 2026 triangulates to over 7,200 in the first quarter for the S&P 500, followed by a sharp fall in mid-year into a time period when the new Fed chair steps in, call it mid to late April. Would it be coincidence that right around when future low should show up on this cycle replay is when a new sitting more dovish Fed chair hits the FOMC? I don't think so. I also think that future rounds of QE and longer-term treasuries are in the offering as a future Fed looks to try to control longer-term yields as an offset to higher inflation, higher risk premiums for overspending, or just an upward drift in global long-term interest rates. A new, more dovish Fed chairman would likely be cheered by the markets for a while, but don't think it'll be straight line up in 2026 for the markets. As one can see, there will be pushes and pulls in 2026, and we'll address more of these in our upcoming videos. For 2026, one of the things that's top of mind for our team is sustained, heightened market volatility. The good news is our investment team has experience in these types of volatile and bucking bull markets. Remember that an elevated volatility also means elevated opportunity for longer-term investors. What does this mean to you and as an investor? Keep following our investment content at Oak Harvest website and our YouTube channels. We'll be addressing more of our outlook over the next few weeks. And tune into our live stream YouTube with Troy, Charles, and myself for our 2026 market outlook on January 29th of next year. Investors, whether 2026 plays out as a bucking bull ride or something different, the entire Oak Harvest team is here for our clients, doing what we can to plan for you, your family's future, regardless of what stage you're at in your career or in your retirement.